Okay. Hi everybody, this is Sunko, the Korean bro. Today is 2022, March 18. March 18, and tonight is Friday night, and I'm happy because tonight is Friday night. Tomorrow is weekend day, and I can get to see my girlfriend, and I can get to have free time, which is a really good thing because these days, of course, at daytime, I focus on my work, which is something that has to do with computer science, but the work that I'm currently doing is not like back end programming, but I'm like more interested in building whole websites, starting from a front end server, database, and I wanted to make a whole thing and then publish it so that people can use it. It's one of my ultimate goal. So I'm like trying to learn the know-how these days. So I spend most of my time working on that thing. But but I'm happy because I can also analyze stock tonight. So it looks like we have another upside tonight. Mm, mm, we have 8% up by Upstart Holdings. 8% up by Upstart Holdings. And 6% up, 7% up by Fubo TV. And what else do we have? 4% up by Paycom Software. 15% up by GitLab. Okay. Big increase. 15% up by GitLab. Why GitLab jumped today? Shares of GitLab developers are flocking to the DevOps platform. GitLab climbed 7.8% on Tuesday after software development company delivered strong growth metrics and an optimistic sales forecast for the year ahead. Yes, so what GitLab's revenue rocketed 69% year over year, over to $77.8 million in its fiscal 2022 fourth quarter, which ended on January 31st. Okay, hold on for a second. Okay, I've got stuff that I have to do. Okay. Customers generating more than $5,000, $100,000, and $1 million grew 67%, 4%, and 95% respectively. Compared to the year-ago quarter, better still, GitLab's dollar-based net retention rate, which measures sales to existing customers during the 12-month period, compared to the prior, checked in at over 152%. Still, GitLab is not yet profitable based on generally accepted accounting principles. It's not yet profitable based on generally accepted accounting principles. It produced an operating loss of $40.6 million in the fourth quarter. However, the company's adjusted loss per share, which excludes stock-based compensation and other costs, narrowed to $0.16 from $0.46 in the prior year period. Now what? GitLab's DevOps platform combines software development and information technology operations to help companies build, test, and launch applications faster than they otherwise could. Judging by GitLab's impressive customer growth, those benefits are clearly resonating with a growing number of businesses. Its guidance suggests as much. Management expects the company's revenue to grow by roughly 54% to between uh, $385.5 million and $394.5 million in its fiscal 2023. Chief Financial Officer Brian Robbins said, "We believe we're addressing a large and early stage market opportunity, and we remain focused on executing to drive sustainable growth and improving profitability over the long term." Two stocks to buy now while the market is still down. Apple and Netflix. Let's look at the chart of Netflix and see what's happening here. Screaming buy, indeed. Screaming buy. Yes, screaming buy. When did it? March 17, okay. While major indices have started to show evidence of a potential rebound in recent trading days, the market is still down substantially year to date. The S&P 500, for instance, is down about 9% so far this year. Meanwhile, the Nasdaq Composite has fallen about 15%. While what major indices beaten down so significantly, it's a good time for investors to go shopping. Yes, a close examination of potential investments reveals that even some of the highest quality names in tech have gone on sale. Market leaders Apple and Netflix are two great examples of high quality companies that are worth considering taking stakes in while shares are trading at lower valuations. Apple, I'm gonna skip on Apple because it's Netflix. And meanwhile, traders at a price to earnings ratio of 32, down from 53. Price to earnings ratio of 32. Price to earnings ratio. Price to earnings ratio. Of 32, down from 53 at the beginning of the year. While investors have been concerned with the company's decelerating revenue growth, the streaming service company is still a growth stock. Fourth quarter revenue rose 16% year over year. Further, management expect its operating margin to continue expanding nicely over the long haul. Its operating margin, albeit with some year-to-year volatility, there is no change to our goal of steadily growing our operating margin at an average increases of 3 percentage points per year over any few year period. There is no change to our goal of steadily growing our operating margin at an average increase of 3 percentage points per year over any few year period, said Netflix management in the company's fourth quarter letter to shareholders when discussing its outlook. Management's guidance for a further deceleration in the first quarter of 2022 and a temporary setback in its operating margin this year relative to 2021 may be spooking some investors, but it's also part of the reason for a significant drop in the stock's valuation and today's compelling buying opportunity for patient investors. It's also worth noting that Netflix could, at any point in time, Netflix, okay. Open its business up to a massive new revenue stream, digital advertising. The company currently has only subscription only plans, but it's always possible that management changes course and unlocks a substantial new business opportunity in advertising by giving consumers an ad supported tier to consider. No investment is without risk, including these two market leaders, but these two stocks' recent sell-offs have certainly increased the odds of a potentially lucrative long-term return for investors who buy shares of these companies today. Netflix, okay, Netflix. One stock down 52% that is straight streaming buy. Shares of the trade desk have sunk because of the widespread tech sell-off. However, the company has only seen success in the past few months. As a market leader in a massive industry, the trade desk could flourish over the next decade. Trade desk. This industry leader is down big time, and with everything going right for the business, the price looks very appealing. The Nasdaq Composite Index officially opened in bear market territory. The index is now down nearly 20% since the start of the year, driven by many tech stocks that have fallen 30% or even 40% in 2022 alone. Is one of those companies falling more than 42% year to date and 52% from its all-time highs. That being said, there's a lot to love about this advertising technology stock. The company makes it easier for advertisers to place ads digitally, since digital advertising is gaining popularity because it is easier to target a specific audience and monitor the success of an ad. The trade desk is poised to grow over the coming decade. I think it's like a AI version of digital advertising. I once worked at a company named Speaking Korea, and while I was working there, my main task was to operate digital advertising, and it was not like automated. So I literally like had to go through like specific keywords and targeted audience and matched I tested here and there to see whether I could get the best perfect result or not. It took me a lot of time to go through every process, but since this company mainly deals with automated system, people, especially who looks for digital advertisements, they will certainly look for this company and let them do the you know tedious work, while you as a business owner can focus on your business. you know I think that will be the reason why people look for this company, and this author is mainly talking about that thing too. Uh, in the driver's seat, it doesn't have much competition because of its network effect. The Trade Desk is the top dog on the demand side of the ad tech space with no major competitors. There are sell-side players like Magnet and Popmatic, but those are not competitors. Rather, they are partners. Sell-side players help the publisher get the best bang for their buck by working with the trade desk to find the best advertiser to publish ads on the platform. The trade desk had a $6.2 billion spent on its platform in 2021, which was 47% higher than the year ago period, and shows how dominant it is in the space. It doesn't have much competition because of its network effects. With every transaction it facilitates on its platform, the trade desk receives data on an ad engagement and viewership. It can then use this data to recommend where advertisers should place ads to reach their target audiences in the future. Hmm. That makes the trade desk platform more valuable to its customers, which attracts more activity and thus brings more data. With leadership, the company has the most data to give the best recommendations for its customers. What makes this advantage special is that it would be incredibly difficult for any competing platform to catch up, since there are few incentives to convince advertisers to move away from the trade desk. The company's customer churn of less than 5% for the last 8 years indicate the platform's strong stickiness. As a result of these advantages, the company has become very profitable. In 2021, the trade desk brought in nearly $138 million in net income and over 380 million in free cash flow. Importantly, the company has been investing these strong cash flows uh, back into its business to provide even greater value to its customers, extending its leadership. Mm. Consensus: these three stocks are strong buys. Mm. This one, James River Group stock, is worth taking a closer look. Truly intriguing stock splits to buy now. Results analysts put a bottom in Semtech. War share mixed after oil climbs back above China. No China. Hmm. The top three stocks insiders are buying. undervalued. Emergency medical care business Jabil is Sanofi stock buy. Pharmaceutical giant Sanofi. Sun Life Financial is a Toronto-based life insurance group with a presence in the U.S., Canada, and Asia. The company has a strong track record of profitability and above industry fundamentals that warrant a premium valuation. Amazon Alphabet. Why buy undervalued tech stocks? Well, tech is down. It'd be great if we all had money to buy even one share of Berkshire Hathaway, which as of March 17 was trading at But Alice, there is a reality. You have to twiddle your pennies and hope that you buy some stuff that will stand the test of time. Let's walk through some true great tech stocks that have massive potential. Holding. Semrush Holdings, SEMR. Hello Group, mobile-based social network platform that includes the Hello mobile application, related features, functionalities, tools, and services for users and platform partners. It's a holding company that provides brand electronic commerce services and solutions for apparel and accessories, appliance, electronics, home and furnishings, food, health products, beauty and cosmetics. No. Record high stock buybacks. Tesla could eventually make flying aircraft analyst. Five facts about Russian central bank chief Navalny. Stocks open lower on Ukraine escalation fears. The Fed is on the verge of repeating history. Burger King says Russia franchises refuse to shutter restaurants. Nothing really came up today. I looked for an interesting article, but nothing seems interesting. Except this one. Tesla could eventually make flying aircraft analyst. In its third act, Tesla could find itself in the skies, speculates Adam Jonas of Morgan Stanley, who closely watches electric vehicle maker. In our view, the change that Tesla does not ultimately offer products and services to the eVTOL UA market is remote. The potential skills, transferability, and network adjacency are too strong to ignore, Jonas said in a new research note. Jonas believed the segment would be called Tesla Aviation and be a logical evolution of the company's approach making electric vehicles. eVTOL is not a helicopter, as former United Airlines CEO reminds Yao Finance Live in the above video, but it could be a huge industry estimate, Jonas colleagues. Total addressable market for the F2 industry in the US could reach $12 billion, powered by interest in non-fuel power short-out aircraft. Looking out to 2050, the investment bank projects the global F2 market could be worth $9 trillion as companies and governments seek ways to reduce road congestion via a green-friendly option. Okay, no more. Let's go through the stock trend. Uh, EPAM systems. Last night, we looked at EPAM systems and at the okay, let's go to Etsy. PAG Interactive is up by 2.83% too. Two stocks that could grow your portfolio over the next decade. Here's why Pollen Capital sold its at stake. 3 stocks to buy in March. 3 beaten down S&P 500 stocks ready to bounce back. Okay, this is it. Etsy, okay. These 2 stocks enjoy long-term tailwinds that could help your portfolio grow steadily over the next 10 years. As the pandemic subsides and the world enters a new normal, investors are on the lookout for stocks that can continue to post steady growth. The plunge in valuations for technology stocks on the Nasdaq may have unnerved many, but that's precisely how you can find great bargains. With share price and valuations being much more palatable now, it's the perfect time to hunt for stocks on the cheap. That said, it's important to ensure you pick companies that have the characteristics to compound your money for years or even decades. Such businesses should have a strong competitive moat, latch on to sustainable trends, leverage their brand to accelerate their growth momentum. As e-commerce has been booming in the years leading up the pandemic. E-commerce. And one of the beneficiaries of this trend has been Etsy, the company which runs an e-commerce platform specializing in unique and handcrafted items. Hasn't its gross merchandise sales. Gross merchandise sales. Gross merchandise sales. Rise from $4.9 billion in the fiscal year 2019 to fiscal year Revenue has more than doubled over the same period. While net income has surged more than fivefold from 4.9 billion 2019 18.5 billion revenue has more than doubled over the same period, 2.3 billion. Net income has surged more than fivefold from 94 million to 493.5 million. Revenue has more than doubled over the same period to 2.3 billion. Fivefold. As this platform has also seen an influx of both buyers and sellers as more influencers post their customized collections for sales. Its active buyer base has more than doubled from 46.4 million to 96.3 million in active users. 46.4 million 2019 to 96.3 million. While the number of sellers has nearly tripled over the last 2 years, however, the company's growth rate has moderated after its pandemic-fueled surge. At its financial guidance for the first quarter of 2022 is for GMS of $3.3 billion and revenue of $577.5 million, year-over-year increase of 6.5% and 4.9% respectively. Regardless, CEO Josh Silverman believes that Etsy still has a long growth runway with a $2 trillion total addressable market for the company's various categories, raising its marketplace transaction fee from 5% to 6.5% on April 11, which should add to its revenue and bottom line. Its marketplace transaction fee The additional fees will be spent on marketing strategies to raise awareness of the company's unique proposition and to engage more people through social media and digital advertisements. Such spending has yielded great results before and should continue to do so. Repeat buyers for FY 2021 shot up by 121% since while habitual buyers more than tripled over the same period to 8.1 million. Etsy have fallen by between 23 and 79% from the all-time highs they hit last year. Amazon, no doubt. Roku, yes. Etsy, yes. Household name that has suffered from decelerating growth. It's the leading marketplace for creative and often customized arts and crafts. Its consolidated gross merchandise sales, GMS, gross merchandise sales of $4.2 billion. Gross merchandise sales. Gross merchandise sales. Over the holiday quarter was a record showing. It was also sales on the platform exploded a year earlier when folks turned to Etsy for stylish cloth face coverings. And against that comparison, any growth at all in 2021 would have been impressive. Sales on the platform exploded a year earlier when folks turned to Etsy for stylish cloth face coverings. And against that comparison, any growth at all in 2021 would have been impressive. May have seen its sales growth slow to low double-digit percentage, but its two-year growth in GMS is a jaw-dropping 154% relative to quarter four 2019. Peaked in November and since then has plummeted by more than 60%. You have to like the marketplace operator here. Number of active buyers has risen by 18%. Number of active buyers. Over the past year to 96.3 million, and the number of active sellers has soared. Buyers, buyers. Active sellers has soared by 72% to 7.5 million. Etsy has come a long way, and with a more relevant base of crafty merchants and discerning shoppers, this will not turn out to be a company that peaked in 2021. Quite growth stocks they're on sale right now, but that only makes the stocks that much more compelling to buy in March. Adobe, Etsy, Netflix, yes, Netflix. As rough as things have been on Adobe's investors of late, they've been even rougher for Etsy shareholders. Its artsy, craftsy e-commerce name is down a hefty 58% from its November high. It's seemingly still in free fall. Yes, the latest wave of selling appears to stem from concerns linked to Russia's invasion of Ukraine and the subsequent ripple effect they may have on the world's consumer facing businesses. Shares initially jumped following estimate beating fourth quarter results a couple of weeks back, but that efforts petered out once tanks and troops began rolling toward Kiev. Investors may have also had some time to stew on the company just so 2022 guidance, as well as weigh the potential impact of upcoming increased sellers fees set to go into effect in April. It's arguably worth the wait though. This year's project sales growth of more than 19% is expected to accelerate to 21% growth next year, with profits likely to grow just as quickly during the 2 year stretch. Not only will disrupted global supply chains be unlikely to impact Act's business, it may well help it in that many of its products are handmade or secondhand goods that sellers are simply looking to repurpose or let go of. E-commerce leaders Etsy and Mercado Libre have exceptionally strong growth prospects. To quadruple by 2030, Canopy's re-innovative industrial property simply has to continue doing what it's been doing. Okay, let's keep reading articles about Etsy. As I read more of Etsy, I feel like I'm really getting knowledge of what this company is. Repeating is the best method in terms of learning, right? So, this article will be the last article tonight, cause since it's 11 at night Korea time. Hmm. Hmm. Belongs to a relatively large group of growth stocks that have plunged significantly in recent months. Shares of the e-commerce company are down more than 50% from the high set in December, but I think that Axis should realistically be able to quadruple or more over the next 8 or so years. The company's 2021 acquisitions of global fashion reseller Depop and Brazilian e-commerce platform Alo7 are likely to boost Axis growth. Should help Etsy expand its international sales. The company is already achieving success on this front, though, with non-US gross merchandise sales accounting for 44% of total GMS in the fourth quarter of 2021. Core platform for handcrafted goods remains its crown jewel. New buyers continue to flock to Etsy with 10.2 million in quarter four, and many of Etsy's existing buyers have become repeat customers. The company hit an all-time high of 36.3 million repeat buyers in 2021, with 8.1 million of those qualifying as habitual buyers. Etsy's market cap is currently less than $18 billion. Hmm. The company's total addressable market in its niche handcrafted products market alone is at least $100 billion. Okay, this is about it today, and I'll see you guys tomorrow. Okay, bye bye.